Hello and a huge welcome to James, better known to the community as Checkmate from Glassnodes. Welcome aboard to Bitcoin People, James.
Thanks, great to be here.
Absolutely gorgeous to have you. I'm going to throw straight into it. We've just had a big collapse of FTX and Sam Bankman-Fried, and all of that's blown up. I've seen stuff coming through from Glassnodes about that, and yet we seem to have a bunch of people who disregard on-chain analysis at best and seem to give it a whole lot of hard time at worst. Why does on-chain analysis matter?
No, this is a great question. It's kind of one of those things that I've got as much conviction in on-chain analytics as I do with Bitcoin, right? And there's a lot of layers to it. I think people kind of see, there's a lot of hype, right? And in many instances, on-chain analysis, at least the version that people saw through 2021, was a bit more of a game of clout rather than a game of analysis. So it's more on-chain clout rather than on-chain analysis. And those two are very different. So I'll start with, there's a few layers to it, right? So what on-chain analysis is at the crux is looking at what's going on-chain, right? We're literally observing what's happening on the immutable, undeniable ledger and trying to extract information out of that. And at the end of the day, what does that reflect? It reflects human beings making decisions, right? There's a decision to send a coin to an exchange, a decision to make a payment, decision to withdraw it. All of these things are important. So within that, there's a few layers to what on-chain analysis is. So what we do at Glassnode is kind of closer to what I describe as economics. We're looking at the macro flow of funds, who's spending, who's holding, what's their overall trends and behaviors. So it's a bit more like, it's the checking the weather and the climate of what's going on in the Bitcoin space. You've then got another layer, which is much deeper down, which is kind of what I would call on-chain forensics. And this is essentially what the likes of Chainalysis would do, or Ergo BTC as an individual. And what these guys do is tracking individual wallets, right? So you're actually looking at, this is in FTX's case, this is Alameda, this is FTX, this is how that entity is moving funds around. It's a bit more, Chainalysis will do government contracts and law enforcement. On-chain sleuths will be tracking what was Alameda doing. So on-chain analysis is kind of that broad bucket, and it includes those two frames of reference. Now, with the case of FTX, there's a bit of both going on, because you can look at the macro flow of funds. In this instance, we've seen that following FTX blowing up, people are just sucking coins out of exchanges to self-custody in a historic way. It really is quite remarkable across all sorts of wallet cohorts. But also, we've also looked at, what was the connection between Binance, FTX, and Alameda? And you can start seeing, well, of the funds that were moving around between these entities, Alameda and FTX was a huge chunk of their overall volume. So now you start saying, when it comes to the forensics and understanding what actually happened, you start to create these, these realities, or call it the evidence that's basically showing that there was kind of one and the same entity, right, between Alameda and FTX, and you can see how these funds flow around. So, in many ways, lots of folks who push back on it haven't done the proof of work to understand what it is. I love a bit of a challenge, but I'll gladly explain why on-chain analysis makes sense, and rebuff as much as I can.
As you should, because when I listen to your, and I don't get to listen every week, but when I listen to your video analysis of the charts, and I know I've said this to you before, at least in comments, it's like a masterclass in how to read a graph. It's just astonishing. What you will read into any given chart is beyond anything I've seen by anyone ever, like your reading of the market. And you made a really interesting comment in the pre-questionnaire about how much this has taught you about psychology and human nature and how that plays out in the markets. If you were going to give us your understanding of humanity 101, greed, fear, and everything in between, what have you learned about human beings?
For sure. No, and this is actually one of the main things that sucks me into markets. So I used to be a civil engineer, designing tunnels and basements and things. And what that really was, I mean, it's pattern recognition. And the difference with the work that I used to do, which is looking at, in structural engineering, you look at concrete and steel, we know a lot about it. It's easy to design, right? No, sorry, it's not easy to design, but you have a sculpture that you can put steel and concrete everywhere that you need steel and concrete.
Mhm.
When you're dealing with the ground is already there. Your canvas is already cast. You now need to work within that environment. It's kind of the space is already there. You're removing stuff and then putting your structure in, rather than an empty space where you're putting, open slather. So there's a different kind of level of constraints. And what markets are is very much the same. It's like a tide. There's already something that's happening. There's a momentum in there that you cannot control. All you can do is essentially assess within that canvas, how do you respond, right? What's your personal decision framework? So in 2018 and 19, when I was getting into this space, I was learning a lot about markets, and what I kind of distilled it down to, and through talking with various mentors and the like, is that the price chart, right, which technical analysis is based off, is plotting fear and greed against time. That's all it is on a massive scale. It's people getting blown up, euphoria, complete greed, complete panic, all of the rest of it. It's just baked into the price chart. So price is that kind of final metric that distills all that down. But what also exists is what's actually going on in the fundamentals of the asset. So if you look at traditional finance and the world like that, you see that you get quarterly reports, and then the market responds. So there's analysts kind of trying to work out what's the most likely result. They position themselves accordingly. Results come out, and then market kind of snaps towards the expected value. With on-chain analysis, or blockchains or Bitcoin, what you're looking at is every 10 minutes you get a quarterly report, right? Every 10 minutes we have a new piece of information about how the network is being used. And in the exact same way that you see fear and greed plotted out against time in price, well, that's driven by people who are sending and receiving transactions. And what we can do is we can look at how long are the coins that was being spent on any particular day. Are we seeing people who held their coins for 5 years? Are they getting out? Is it all just churn of people who recently bought? How much profit and loss are they locking in? Are there people who bought the top and are now capitulating at the bottom? Are there people who bought the bottom and are now selling the top? So you can start to see that fear and greed and pain and euphoria playing out in the data. You can see the smart money getting in and out. You can see the dumb money getting in and out. And as we discovered this week, self-custody, and this is something I think a lot of people miss, all that trading activity, sure, it happens on Binance and Coinbase and FTX. The trade happens off-chain, but every single day, there's billions of dollars of Bitcoin flowing in and billions of dollars flowing out in both directions. So the net flow is, it could be several million, 10 million, 50 million in terms of in or out on net. But the both sides of that, the in and the out, is billions. So it may net out to be a smaller number, but inside and out is quite significant. And as we discovered this week, the demand for self-custody is always there. Trading desks, even those whose job is to do algo trading, they will have a treasury of assets that they accumulate and acquire. They will be pulling that in and out of exchanges even more so now, because there's that counterparty risk. So they may be taking their profits. They may periodically take their funds off. And all of that is locking in the profit, the loss, the holding time. So all of this human behavior also shows up in the way that people are actually moving their funds around on chain. So, what it's taught me about humanity is that humans repeat the same patterns over and over and over again. And I'm not going to lie, I went into this cycle in 2021 and thought maybe we will start to see some deterioration of on-chain signal. Because there is all these futures markets and things like that. And yet I go back and I've kind of reviewed what's happened over the course of this year, and the signs are clear as day. It basically has as much signal as you would hope for. I don't believe there's been any deterioration. In fact, I would almost argue it's probably superior, partly in result that we just have more tools, more understanding of how to use it. So in my view, it's another variant of price charts, in that human psychology is being baked into this data every single day and with every single transaction. And that to me is it's amazing and it's edge.
Fascinating. Have you, I've got three different lines of thought going through my mind at once. Who uses Glassnodes most? Who are the people who most check that data?
Yeah, so there's kind of three different buckets of people who use Glassnode. There's what I would call kind of retail level folks, right? You and me, people who just want to understand what's going on in the market. They want to kind of move their portfolio around. They want to look for opportunity. Maybe they're in there for kind of trading, but kind of that retail level focus.
Mhm.
And many of these folks are essentially hodlers, right? They want to understand why things are happening and what's moving markets. And when they see something on Twitter, they want to be able to go and verify it, right? They see someone talking about miners capitulating. Well, they want to go and actually check that data and say, well, yeah, no, I can see this is happening, or dispel it. So there's that level of folks. And there's a bit of an offshoot of them, which is kind of researchers, right? That could be media, that could be, people who are academics and they're trying to understand this space in this market. You've then got another tier above that, which is kind of the professional traders. So these folks are people who, actually make their living trading these markets, and thus having more edge and more information is critically important. And, these folks are the guys who are plugging the data into their algo traders and bots. They're the ones who are actually really pulling all the data and dissecting and finding what is the edge that helps their particular trading strategy. And they're looking for what is their strategy that helps them make money on a day-to-day basis. And then the top tier of that is then you've also got the institutional side. Now, they're kind of an extension of the pros, but more along the lines of, you've got teams of quants who are actually really crunching some serious numbers on an institutional scale. Those who are looking for risk management, but you've also got the likes of, regulators, big banks, securities authorities, people who want to understand at the highest level, that want to understand how these markets operate. So, that kind of is a bit of a blend. It almost brings it back full circle because you've got researchers who want to understand what's the balance between Bitcoin, what's the balance between altcoins, what's the balance of stable coins, how are these funds moving around. They also want to understand the market structure. So it really does ramp up. It kind of branches across, from small through to giant. In terms of entity size, and at the end of the day, it's information that provides you with edge and understanding about what is really going on. The kind of data you can't argue with because it's baked into each block, and it's kind of vital once it's in there.
Are you doing present educational stuff to government? Like, are you directly dealing with
Yeah. So
regulators?
and that's what I found quite interesting. So I'll do a regular session with various entities, whether it's trading firms, whether it's some in government, some in big banks, um, individuals. There's all sorts of things, and interestingly, there's varying degrees of knowledge across all these sectors. So sometimes I'll speak to a retail investor, and they've been studying this like I have for many years. And they are orders of magnitude further along the learning curve than some of the best Wall Street traders. They may not have the capital, they may not have the means to kind of execute it the same way, but their knowledge base is much higher. And this kind of speaks to Bitcoin being a grassroots movement. It always has been.
Mm.
Conversely, there's some of these institutions that all they do is they take numbers, they pull every piece of data and they crunch the numbers, and they let their models and their machine learning go and do a lot of the work. And there's others that have done all, like, some of the entities have an extraordinary amount of knowledge. They've clearly got their research departments who have been looking into this stuff for many years. And they're at a different level of understanding as well. So you get some institutions that have no idea, and they're going, "Can you give me the lowdown? How does this whole thing work?" And you really have to start from square one, right? You then also got institutions who are super on top of it and know exactly what they're doing, and you've got those two categories in retail as well. So it's kind of a spread, and that's why much of the content that we do is kind of focused on the education side, because whether you're a pro trader, an institution, or retail,
Mm.
many of these folks are at the exact same level.
Yeah. Okay. So what I'd like to do now, that's intrigued me for a while, actually. I'm really pleased you cleared that up for me. I've been wondering about how Glassnodes gets used. So can you take me down your rabbit hole? Can you talk me through your journey, how you ended up A, in the Bitcoin space, and B, on-chain analysis in particular?
For sure. Yeah. So I was class of 2018. So my best mate told me about this crypto thing, and I essentially bought. In fact, it's a fantastic buy. I bought the very, very top of Ethereum. Now, that was the first asset I'd ever owned. Right. I'd never owned a stock. I'd never invested in anything. So the first thing I ever bought was ETH on Coinbase. And it's even better than that because back then, Coinbase had an additional fee for Australian dollars. So if you actually, when I did my taxes, you can actually see that I didn't even just buy the top. When you add the premium, I bought above the wick
Above the
on
top.
above the top. So I actually probably outbeat anybody. So anyway, over the course of 2018, I lost a stack of money, kept pouring money into it because I found it intriguing. It was kind of interesting, and you started learning about market structure, right? And really, growing up in the bear market is, I think, the best way to do it, because you learn via just sheer pain, right? You just lose money time and time again. I lost 90% 3 or 4 times in a row. And you've got the big spreadsheet with 55 different altcoins on there, and they just keep going down. And eventually, we get all the way to November 2018. I'd learned a lot about price, learned a lot about market structure, and still hadn't clicked what Bitcoin. In fact, I'd never read the Bitcoin white paper, and I'd never held Bitcoin for more than a couple of days before I exchanged it for some other shitcoin. Anyway, November 2018 comes along. By this point in time, on-chain analysis had started to evolve. Things like the realized cap had started to come out. There was there was something about the visualization of data inside the network, and then being able to apply that to market structure kind of triggered that engineering side of my mind. So it was almost like a way to visualize what was really going on. And anyway, then we had that capitulation in November, December, and portfolio goes down another 99%. I thought, all right, okay, clearly I've missed something quite serious here. So the next step was I went down the Bitcoin rabbit hole, and I just got to go back to square one. And actually, my orange pilling moment was Pete McCormack's podcast. He did a series on Mount Gox, and listening through that is the thing that clicked. I don't know what it was about it. It was just like the primacy of the technology. And I think when you start hearing about the lengths to which people went to try and get ownership of Mount Gox, right? Even though it's a defunct exchange, and even though they lost a shitload of money, the fact that so many people way back in the day were fighting tooth and nail through all sorts of legitimate and less legitimate means to get some kind of ownership over that structure told you that there was something valuable there. So started doing more research, and then finally it all clicked that it's about sound money. Understood the concept of sound money, why we need it, and naturally that leads you down the road of Austrian economics, the fiat system, understanding the plumbing of the financial world, and in tandem with that, on-chain analysis became a really interesting tool for me to visualize this. Being able to see the realized cap moving up and down, looking at NVT and RVT ratios, looking at valuation models, right? Where are we overextended, underextended? How does Bitcoin respond to the human side? So I understood price, but technical analysis, I kind of get it. And it's mapping the same things, but it's as an engineer, I like to explain why things happen. Now, price, if you just look at it, it's like, okay, it's an ascending triangle which has a target of this. That to me is a really boring interpretation. If it's an ascending triangle that's got a target of this, but you've also got growing transaction demand, you've also got people flowing into the network, you've got profits being, people are actually there's a psychological reason, a fundamental reason for it to follow through. That's way more interesting because that's a very concrete reason why this should actually play out. So in my view, on-chain analysis carried the fundamental story, and you could chart the fundamentals of what was going on. So price was part of the story, but the on-chain part was where the conviction comes from, because you can see how people are behaving, and then you apply that to the price chart and you go, okay, now I've got some real edge. And I think it engaged a lot of people like that. And it's just a way to visualize how the world works from a very engineering mechanical mindset. So anyway, through 2019, a lot of work kind of studying and understanding on-chain analysis, a couple of papers and a couple of metrics to my name. Started meeting some of the folks, right? The Dave Pules of the world, kind of learning about a bit more about who these guys are, how they work. And then come 2021, I'd done work with a couple of newsletters here and there. And come 2021, one of my subscribers said, hey, Glassnode has a position for a data scientist. Now, I was still a full-time civil engineer at this point in time. And I taught myself Python, but I'm no data scientist. But anyway, I applied anyway and just kind of showed that, hey, I built, Check on Chain, which was my website. I've done, work for this newsletter. Here's a video of me explaining, Realize Cap and NVT and samples of the work. And they said, look, there's no chance that you're a data scientist in the interview. And I said, yeah, I know that. And they said, but what we do need is someone to help explain, like from a analysis and the content side. So maybe we can actually form a position. Let's just see how it goes. So anyway, we started as a part-time deal, 2 days. I think it was 2 or 3 days a week. So I do that alongside engineering. Told engineering, I said, look, I'll just want to try this out because it's more aligned with my passion. And within 2 weeks, I'd resigned and just said, I'm going to roll this dice and just see how it goes. And the rest is kind of history.
Yeah, well and truly, absolutely fantastic. You're prolific. The amount of stuff you churn out is gobsmacking. And as we were just talking about a little bit just before we hit the record button, you've just had to churn out some stuff on short notice around the FTX thing. Are you still as passionate about it?
Oh yeah, no, absolutely. And it's funny actually. So one of the things that really drives me forward, and the primary reason that kind of motivates me to do this is, for whatever reason, a lot of folks, let's say in the West, in the privileged West, don't understand the edge of on-chain analytics. There's obviously a lot out there, but where we see, and it's kind of a little bit like Bitcoin actually, people don't necessarily understand sound money until you've had to deal with bad money. And we find that in the developing world, you have huge swathes of people who understand immediately. If you're in America, you've only ever seen the US dollar. You don't need to understand currency conversions. If you're in the developing world, you by default have to worry about currency conversion. And what I've found is that the little guy actually does a lot of work to understand both Bitcoin, but there's a lot of folks in the developing world who really understand this stuff to a greater extent than many in Wall Street. Just to kind of put a highlight to this point, we got sent a video the other day, and I couldn't believe it. I was mesmerized by it, of a classroom in Vietnam where they teach the Week on Chain, the newsletter that we do, in Vietnam, to a packed room with tables, desks, and people just studying there and learning how to use Glassnode tools. So this, to me, when I see this, that's essentially like I knew that there was things like that going on, but that is why I do it, because that and what these guys are doing, they're training to become analysts so that they can find work in the West and essentially then go and find work. And that is what it's all about, as far as I'm concerned, right? If we can introduce sound money, if we can push forward and give more people opportunity, I'm a big advocate for the internet. I mean, none of this stuff with on-chain, there's no university classes. This is all grassroots, right? You only learn about this by doing the proof of work. And I think that's essentially what it's all about, right? What people want to see is they want to understand these things and help be curated. So the products that we roll out at Glassnode is really focused on making sure people have contextualized information, putting them all into a dashboard and helping people. I want to answer this question. I go to this toolbox. Here's your tools. So that's essentially what drives me forward, is helping the little guy find their edge and make the world that little bit better by them being in a better position. So that's essentially my big driver. And as I mentioned before, those very same tools that work for the classroom in Vietnam works for Mr. Wall Street trader, who's going to be able to use probably the exact same level of understanding because of how new and nascent this whole space and discipline is. So, one tool actually services both needs, but the thing that motivates me is the little guy.
That's heart-opening and eye-opening.
It's wild.
That is wild. That is cool. I want to go back to absolute basics for a moment, because I live in hope that some of my friends and family watch some of these recordings. This is my kind of orange pilling effort for the world. Can we just go back to sound money. And I know this, of course, has been done to death, but everybody's got a different take on it. And I've been
Totally.
a bit obsessed over the last couple of weeks, falling asleep at night and waking up in the morning, thinking about the issue of trust. And what is trust? And Jeff Booth talks about money as being the, I've lost the word, almost like the foundational sort of element of society. So I've been thinking about that. I don't know you, you don't know me, you've got apples to sell, you don't trust that I'm going to provide you with the chickens, so I give you money that we both trust. And then Jeff Booth talks about, and then when the money is dishonest and becomes untrustworthy, everything in society breaks down and we lose. And that's, I think, what we're seeing right now. But it's hard for, I think, people who are new to this space to make that leap from money as trust to the degradation of our money, and then the impact of the degradation of the money to society, and why we no longer trust our police force, our institutions, our government, our financial institutions, any institution. We don't trust anything anymore. We barely trust one another. Certainly the left and the right don't, and we've got these Twitter wars. And all of that feels to me like it's about this lack of sound money, that lack of trust that we can feel at some level but can't put our finger on.
No, and this is the thing. It's the reason why it's so hard for people to grasp, and I'm in that camp as well, where I think that the concept of money and how corrupted it's become is the root cause of a great deal of the evil in the world. And it's essentially it comes down to a few things. In my view, money is a representation of time. So you and I spend time doing something, and time is our most scarce resource because it's the only thing none of us can print, right? None of us can get more time once you've spent it. And the great story here is, well, Warren Buffett is worth however many tens or hundreds of billions he's worth. Would you trade your life right now for his? And almost no one would say yes. Why? Because he's only got, he's almost 100 years old. So you wouldn't trade your anything for being Warren Buffett, despite how rich he is, because you're never going to enjoy it. So time is your scarcest resource. And if you spend time, energy, and effort doing something, and this is what's so brutal about what happened with FTX too. People spent time, trading funds spent time, anxiety, they managed risk, they did all of those things. And then if someone takes that away from you, they've taken away time you can never get back. Effort, energy, it's not even the money. It's money is a representation of something that you did in the past. Now, the reason that we have that money is because I may do a whole lot of work yesterday, but I don't need to buy everything tomorrow, right? So money is a vehicle to actually store that time. I spent a bunch of time over here, but I need to spend it on something in the future. So it allows me to transport my spent time over time or over space, so I can move somewhere else and I can make purchases elsewhere. It's a way for me to allocate and transport my time over time and space. Now, when you have an inflationary system, now, as Jeff Booth will talk about, the world naturally wants to deflate because you only need one guy in a tractor to manage a farm now, whereas you used to have 50 guys with a scythe, right, cutting down. You need more human beings and less efficient. The more efficient we get with technology, the more we can produce for less. Now, supply and demand, if we can increase supply at lower cost, shouldn't that drive prices down? And the answer is yes, it should. Except we have a system that's built on fiat currency and debt. And what that means is that if prices don't go up, the debt cannot be inflated away and get smaller over time. And you roll that playbook forward for 50 years and you end up with a very unsustainable system where if the money doesn't inflate, then it will collapse. Now, the problem with that is that the inflation problem of them printing money is seigniorage. It's the governments and the central banks and commercial banks creating money. Those closest to the money spigot can create that money for free, essentially. And what that does is it actually dilutes, because money is a supply and demand problem too. So if you've got $1 million in the whole money supply and you double that, well, there's still the same number of apples and the same number of gold bars and the same number of televisions. So as a result, everything should go up by 2x in price. Now, what that does is the people who held that money, which is my spent time, I've already exhausted time, energy, and effort, which I can't get back. And now you're saying that you're going to devalue that stored time by 50% just because you want to. And again, you roll this playbook forward by 50 years and you end up in a situation where they have to now print the money. And by them printing the money, they're essentially stealing time. They are stealing something that you've already done. Now, they've already taxed you on your income. They've already taxed you on what you spend it on. They're going to tax you on any investment gains. They're going to tax you on all sorts of things. And then in the back door, any money that you're not spending and that you've got in your savings account, they're going to tax that via inflation too. It's a really insidious process. And what people don't realize is if you don't remove that power of the money printer and separate money from state, then essentially you end up with the problems that we have in society at the moment. And there's kind of a final concept here to hopefully round this all out, which is the concept of time preference. Now, most people, if you run the thought experiment, if you are living paycheck to paycheck, which means that money is essentially very, very scarce for you. It's hard to come by. You literally get in what you have to put out. You don't really have time to take risk. You basically need to make sure that your next paycheck comes in. You don't have time to invest. You don't have time to allocate money to anything else. On the energy side of things, you don't care where your energy comes from. You don't have the money or the means to do anything in terms of, if you want to lessen your carbon footprint or whatever it is, you don't have the choice. You just need to survive. That's your job. Now, run that playbook if you have let's say a year. You've got a whole year of your living expense in the bank. You could pause. You could take some time off work. You could go and rest. You could think about how you're going to invest your money. You could contemplate opening a business. You could contemplate a career change. By having that savings behind you and being in a better position financially, it affords you time to think, take risk, invest properly, and just all in all be more considerate about your life and the impact that you have on the world. So let's take that concept and bring it back to what I was talking about before. If you give every single person, if you have their money, everyone's got the same savings, and you guarantee them that you are going to inflate the money supply and steal their spent time, you are naturally forcing these people to be higher time preference because they know that their money will buy them less a week, 2 weeks, 6 months from now. They are more likely to spend it now where they get more apples today than they are in the future, where if they knew that they would be able to buy the same amount of apples, there's no reason for them to spend it now. So on the other hand, if they know that things are going to be a little bit cheaper in the future, or at least stable, right, because the money's not going to be inflated, at the very least constant, right? The value of the money in terms of its purchasing power is going to remain constant. They're more likely to plan for the longer term future, and that lowers people's time preference. They would prefer to actually invest for future than today. Now, Bitcoin is essentially, and many people you speak to, and I'm a case here. Bitcoin completely changed the way I think about things. Now, I've always been a relatively low time preference person, which means I'm generally thinking about what's 2025 James doing, what's 2030 James doing. Bitcoin and the understanding of scarcity and the understanding of the money supply and things like that. I'm actually now thinking about 2050 James's children. I'm not just thinking about 2025 James. I'm thinking about, I don't even have children. I'm thinking about right now how I invest for my not yet in existence children. That's the level to which it's extended my time preference. Now, run that playbook across the next 4 years. What would happen if those politicians were thinking about their children's future? And you start to see that if you gave every single person a lower time preference, we would start thinking about the next 10 years rather than the next 10 minutes. We would have less Instagram influencers maxing out credit cards and more people investing in small businesses that are actually going to help their community and just generally be better for the world. So by not stealing people's savings and spent time through inflation, by having a sound monetary standard that just doesn't change, right? There's only 21 million coins, and that's not going to change. So it becomes the meter of value. Right now, we're in the monetization phase, and people can't understand the volatility, but it's like, again, we're talking about 10, 20 million people realistically who are in this space. And there's 8 billion people in the world as of yesterday.
Mm.
So you're now in the situation where it's so early. I mean, nothing goes from zero to global money without volatility. The volatility just happens to be, over the long arc of time, you don't get there without volatility. There is no path forward. So a lot of people get stuck on things that are quite trivial to dispel. But at the end of the day, sound money helps lower people's time preference. With a lower time preference, there's more focus on the future. If everybody had more focus on the future, you'd start to recognize a lot of these political games are, in fact, games and not worth anyone's time. And you would have politicians who would have to then also align themselves with that. You would have a constraint on government spending, so they're not basically just willy-nilly spending on stupid shit. You'd be able to remove all these excessive dinners, because if you go and have excessive dinners and you take the piss out of the taxpayer, you're not going to make it. You're going to get voted out. So all of these things have societal ramifications over the long term. And, Bitcoin for me is essentially a tree, which I've already resigned myself that it may not be something I ever sit under, right? It may be a tree that we plant today that's for my children or my grandchildren. The fiat money system that's happened for the last 50 years, well, to be fair, a lot of the folks who are currently setting the rules in government, primarily the baby boomer generation, has borrowed from my grandchildren's children and brought that money forward to today. It's already spent, it's gone. So that wealth has already been essentially consumed, which what did they leave for the future? Not much. The idea is to flip that script.
That's possibly the best explanation I've ever heard from anybody in this space. And that's
It's all about time preference.
just
And Bitcoiners, every Bitcoiner I've ever spoken to has had this epiphany.
Mm.
Once you finally understand it, it changes the way you personally operate.
Yeah.
Some people, I mean, you see them on Twitter, you see them in conversation. Some people are like, I used to have maxed out credit cards. I used to, spend money on all sorts of stupid things. Once I found Bitcoin, I've now got savings. I've got plans for my family. I've changed jobs. I've found something that I love doing. I've got better hobbies. It changes you for the better. And I think that alone is evidence that human beings can evolve and are in a better position under a sound money standard. And this is with all of the volatility. So as this thing gets adopted, it's going to change the world. And it's, I think, the most important technology maybe ever.
That I absolutely 100% agree with. And as I said to Greg Foss recently, I'm just, is this a pipe dream? Am I just too hopeful? Is this realistic? And he took me through some maths that was really extremely convincing. Jeff Snyder was interviewed on, do you know him? On Peter McCormack. We were talking about Peter McCormack earlier, and I was listening to it on the weekend. One of his concerns around the 21 million Bitcoin is that money tends to pool. So you've already got Saylor with his funds under management. And so Jeff's got some concern around that and the productive money required for business and international trade. Do you see that as being an issue in some way, shape, or form? Do you imagine Bitcoin being a complementary or an alternative?
So this is actually a really good question. And there's kind of what I think should happen. There's what I think is the most likely thing to happen. So I'll go down the first path first. So what I think should happen is that we move back to a sound money standard. Now, what that would mean is Hyperbitcoinisation or a gold standard, something on that vein. Now, then there's the argument of, people are going to hoard money and so on and so forth. And it's like, okay, but you've got a purely inflationary system right now. And we're talking about wealth inequality is one of the biggest problems in the world. So at the very least, that's a constant. So thus remove it from the equation because it's going to be no different.
Yeah.
The other one is, people say that people won't spend their money. Well, that's not true because, some companies, which I'll shamelessly shill, CoinKite. These guys make cold cards and block clocks. I will only ever, BTC pins is another one. Granted, they're Bitcoin kind of paraphernalia. Nevertheless, the quality of these products is out of this world. They're just fantastic. And I will gladly spend my Bitcoin. At this point in time, I immediately replace it with fiat. Nevertheless, I will gladly spend my Bitcoin if your product is good enough. Now, the problem is what I don't need is 15 different pairs of fancy Nike shoes. It's not required. I don't need these things. I will gladly buy a new surfboard if that's what I need using my Bitcoin because that's what I want. It's what I want to purchase, and I will go and buy a high quality one. Lowering your time preference means people will spend the money. You just have to make it worthwhile for them. So again, what that does, it means that everyone has to do better work, higher quality, create real products that service demand in the market, not create, cheap shit that just they want to sell because it's a dollar on a spreadsheet. So again, it's kind of that long term. So I understand their concerns, but what I also disagree with, I mean, we existed on a gold money standard forever, right? Fiat money is actually the anomaly. So in many ways, it's kind of an argument against history. Now, that's what I think should happen. Now, I think the probabilities of that scenario is small. What I think is a more probable scenario, at the very least for our relevant timeline, right? Next 20, 30, 40 years. What I think is more likely is a dual standard, which is where we have fiat money, because the governments will not let go of their monetary standard. But I also think they won't be able to kill Bitcoin. So thus you are going to have a dual system where central banks can go and buy as much gold as they want. I mean, I don't know if you've ever bought gold, but it's not exactly a very convenient medium. And most people just have it in their trading account anyway, which is basically a paper claim. So Bitcoin is something that you can hold personally outside the monetary system. Now, what that does is it creates a check and a balance. So when we go through these periods like we did in March 2020, where the governments just print a stack of money and inject it into the economy and essentially debase the currency, which they're going to have to do mathematically to save their bond market, they have no choice, which I'm sure Greg talked about. So mathematically, they must debase the currency. There's basically no other way around this. It has to happen. So what that means is that if you are holding a scarce asset, which will appreciate during that time because the denominator goes down, loses purchasing power, so thus everything else goes up, housing will go up, gold will go up, Bitcoin will go up. All of these things will go up in purchasing power relative to the currency. And what I think that means is that the debt-based economy that we currently have, I would be incentivized to borrow fiat currency, which I know is going to inflate away and get cheaper, invest it in hard assets, whether it's businesses, whether it's companies that produce things we need, like oil and gas, whether it's gold, whether it's Bitcoin, whether it's housing. I would be better off borrowing and actually adding to the debt, pouring additional petrol on the fire, borrowing that money, putting it into something that's going to go up in value, investing that money in something else, which the currency will go down, the value of those things go up. And I think that's essentially an acceleratory thing, which is going to probably move towards the later stage view of Bitcoin and gold probably coming back as the primary sound money standards. So I see a dual system. I think Michael Saylor probably has a very similar view where we're going to have both. When governments spend too much money and inflate the currency too much, people will gravitate towards Bitcoin. When they start behaving, and we're seeing this right now, as they tighten monetary conditions and the price of money, interest rates go higher, and the money is more reliable, then you're going to see people shift back. So you end up in this situation where Bitcoin provides a check and a balance. Mr. Government, if you go and misbehave and you destroy our purchasing power, we're out. If you start behaving, we'll come back. So it becomes a natural check and balance on government spending. Now, naturally, this is a very painful process because your developing world countries and currencies will implode first. And I think even Jeff would say this, it's periphery to the core. You end up having the small countries blowing up, then you start moving in towards the G20, then eventually, we started with the UK this year blowing up, right there. It's kind of showing how close to the core we actually are. But anyway, I think it'll be a dual standard. I don't think governments will let go of their control of money anytime soon, but I think it provides people optionality and a check and a balance on what's going on and an option, right? And a lot of people in the West don't seem to understand this, but if I wanted to move country, and Australia is a great country, but they made some decisions over the last couple of years which were pretty concerning, right? They locked me in my house for 2 years. You do that again, and I'm out. I'm taking my tax money elsewhere. Now, I can't take bars of gold and my stock portfolio and a house and my car. I can't take this stuff with me overseas. I can take all my Bitcoin. So I can take my wealth and move somewhere else. Now, that's the first world. Now put yourself somewhere in the third world. And this shit happens all the time. those people, and we see this time and time again. Chainalysis actually does excellent series of reports looking at the per capita adoption. So yes, there's more dollars invested in Bitcoin in the first world, but per capita, Nigeria is like 38% of every per capita. 38% of Nigerians have exposure to Bitcoin. Why? Because it services a very, very real problem of escaping government tyranny and inflation. So, and payments, right?
Mhm.
People can transact in and out of whatever country they want, in or out of sanctions. When you look at things like sanctions, do the Iranian people really deserve the pain that sanctions put on them? I personally don't think so. Sure, people may not like what their government does, but do their people really deserve that? I don't think so. So
Mm.
the ability to move money in and out of countries, which and servicing the human layer. I don't care about the governments. The human layer is
Mm.
important, and people adopt it in the third world because it services a very real need. So anyway, that's my kind of long-term view. I think we've probably got 30 to 50 years of this painful transition.
Mhm.
I think fiat currency is mathematically designed to blow itself up. It will start periphery to the core. That will push more and more people towards sound money. It'll be a volatile process, but at the end of the day, fiat money is guaranteed to die, and Bitcoin yet to find much evidence to say it's going to die at any point in time.
That's hopeful. Talk to me about credit. What we've traditionally seen with fiat is credit expansion and then sudden collapse and contraction. So over sort of 20-year periods. We've already got Bitcoin futures. There's already Bitcoin loans and credit, but there's limited supply. So you can't print it to pay your debt. So I've been trying to play that out in my head. There is credit, there are futures, and yet, as you've already said, there's checks and balances on that,
Mm-hmm.
which takes me back in time to an honest banking system where they didn't used to lend out more gold than they actually had in reserve.
Yes.
That's what it feels like to me. Is that what we're heading towards?
Yeah, so I mean, I think a lot of people, and rightfully so, their reference point is going to the shop and seeing Australian dollars on the tag, on the price tag. So a lot of people think that Bitcoin is volatile, which, if you use your Australian dollars as the reference rate, yes, it is. The hilarious meme is that we all say, 1 Bitcoin equals 1 Bitcoin, usually when price goes down, right? Because however, just envision for 1 second that the price tag for that television was quoted in BTC. Once BTC is the standard, then the price is normal. And what you would actually see is that as technology improves things and drives down the price of that technology, things will get cheaper over time in BTC terms.
Mm-hmm.
So when it comes to actually borrowing of BTC, again, we'll come back to those two different worlds I described. In the purely hyper-Bitcoinized world, if everything was priced and quoted in BTC, then you would actually expect the value of things to go down over time, which would actually incentivize you to borrow that Bitcoin, invest it today, drive down the price of things, create new production, but only on projects that made sense. Because what you would do is you'd have banking systems, whoever's providing that credit, they have to do the due diligence. You can't just do what we've seen in the VC space where they just shotgun spray money out there and say, some of it will come back, right? They actually have to do due diligence. FTX was a perfect example of a fiat Ponzi scheme in the sense that the VCs threw hundreds of millions of dollars at this guy, and nobody thought it would be a good idea to put a board of directors in place.
Mm.
If you were going to lose the scarcest asset in the world, your money, your Bitcoin, if you invest in this thing, you probably have your analyst team just do that little bit of due diligence. So by making the money scarce, people will always have productive ideas. Human beings are an innovative creature. We'll always come up with new and good ideas to produce. And we will. What that will mean is the entrepreneurs who are creating solutions, if they want to survive and they're going to borrow this Bitcoin, they're then going to have to invest it and actually turn it into more, right? Create productive capacity. they need to make sure they've found an actual gap in the market. Furthermore, the banks and the people who are funding that venture, right, providing that capital up front, they want to see their Bitcoin come back to them. So thus they're going to do the due diligence. So again, it comes down to that lower time preference world. So I think that in that space, you're going to have a scenario where people will have to do the work to actually make sure that this is a good product, a good idea, is well funded, is secure, and basically a better long-term investment. So that's the hyper-Bitcoinized world. In the kind of what I mentioned before, the fiat / Bitcoin duopoly type world, the situation there is that you can essentially use your Bitcoin as a form of collateral. Now, despite the price volatility, in terms of its, if you just look at its properties, the ability to transact Bitcoin immediately, right? 10-minute settlement time is as far as immediate as it's going to get, because most people don't understand that when you pay with a credit card, you pay with your debit card. The only time it's final settlement is when you hand cash over the table. Unless you're doing that, these things get settled once a week, once a month between banks. So you don't actually have final settlement until you hand over that cash. So Bitcoin's ability to immediately settle, and the fact that there's a market trading for Bitcoin in pretty much every fiat currency in the world. I don't know if there's any other asset that has a currency pair in every fiat currency aside from the US dollar. And even then, it's harder to do that in the developing world. There will be Nigerian currency and Turkish lira and all that to Bitcoin everywhere. It's all over the place. So you can settle debts and close out that position anywhere in the world almost immediately. This is what Jack Mallers is doing with the Lightning Network. That is, pretty much final settlement immediately. You can settle all these trades immediately. If there's a position, you can loan against it. If you have to get liquidated, it can happen immediately. Now, what you want to do there is you essentially have the Bitcoin, which is the perfect, pristine collateral, but you borrow against that. You essentially use that as the collateral up front. The same logic applies. I don't want to lose my Bitcoin. If I'm going to borrow against it, you better believe I'm going to protect that peg. Right? I do not want that thing to get liquidated because it's my scarcest resource. So thus I can borrow those dollars, use them in the fiat economy, invest and whatever else, but I've essentially borrowed against pristine collateral that whoever my counterparty is can settle that immediately. Now, there's a whole nother layer to this, which is the practicality of it. And what we saw with FTX was counterparty risk. I mean, Bitcoin is designed in a way, we're not there yet in terms of user interface and actual application, but it'll get there. Things like multi-sig, collaborative custody, Fedi mints, there's all sorts of technology that can and will exist that allows a far more secure counterparty setup with these exchanges, with these other entities. So, there's ways to solve these problems. It just requires entrepreneurship, but I think credit can exist in both systems. I think it comes down to lowering of the time preference and how you invest. I mean, again, we've had debt on a gold standard before. This is not new technology. I think people forget that the fiat money system is the abomination. It is the kind of the aberration of history. Most of the time, it's been a gold standard. Things collapse, things blow up. We then return to a gold standard. This is the way of human history, and I don't see why we can't have credit in a Bitcoin economy or in a dual Bitcoin fiat economy.
That clears that up for me. Excellent. You're just like knocking over the questions that have been bothering me just one at a time. This is just excellent.
This is the Bitcoin rabbit hole. There's many Warrens, and I'm sure that no one gets anywhere close to the end of it.
No, that's right. And just when you think, I think I saw one the other day, and you sort of get to the, you get to the top of one peak and you think, oh, it's all about sound money, I've got it. And then you see the next peak, and this is where I'm kind of now, is trying to wander down this next part of the rabbit hole. Tell me a little bit about you personally. You've talked about how it's changed your time preference. You said in your pre-questionnaire that honesty was already kind of a really high value for you. I'm just going to read this back to you if you don't mind. So in terms of your values, and I'm curious about where these came from and how Bitcoin has affected them. Were these your values pre-Bitcoin, or have they really come to be post-Bitcoin? And and so how's it changed along the way? How have you changed along the way? So you said here, autonomy and ability to choose how I work and live, honesty and maintaining a high standard, and then quality first and doing it right the first time. Now, I think you've touched on all of these throughout our conversation, and you've talked about how Bitcoin will affect, in fact, each of those elements for the whole world. Have these come into being for you since kind of your Bitcoin journey, or do you think
I think
this was
they've,
always there?
yeah, no, I think they've, that's always kind of been my main kind of focus. And, for example, when it comes to understanding what's going on in this space, like, the kind of the Bitcoin versus altcoin debate is a good example of this. So there's two approaches that you see, right? There's kind of there's one approach where you just say everything's a scam except Bitcoin, you just carry on, right? And you just everything that's not doesn't fit that worldview, you kind of disparage. Now that will work for some people. It's more of a fun thing rather than an effective tool, and it turns a lot of people off.
Mm.
Now you can also have that same opinion that the vast majority of this space is junk, but Bitcoin is the primary innovation here, whilst also having done the work to understand why. And that's kind of the camp that I sit in. So whenever I have a view or an opinion, I try to make sure that it's backed with some kind of evidence. So when it comes to my view on the altcoin space, it comes from years of having used these things, right? I've been playing around with Ethereum for many years. I understand why it works, why it doesn't. I've done the work to understand what the real risks are with the design decisions that they make. I've played and blown up things in DeFi. I've lost money on it. I've all that kind of stuff. And the reason, and what I've always tried to do is not go down the path of chasing clout, right? I don't want to just put out a tweet, which will, I guarantee you, get more engagement. If I just said that Ethereum's a shitcoin, that will get way more engagement than if I actually put out a well-rounded case argument for this thing. So when you actually do the work and you can back it up with evidence and data, and as my friend would say, be undeniable about whatever opinion it is that you have, in my view, that builds trust. And, again, I'm not saying that people should trust my views, but what I try to do is give it a view that people can at least see my working, right? Open hand. Here's my worked calculations. You can then go and verify it and check it for yourself. Here's the rationale. It kind of comes back to when I was an engineer. One of the things that I tended to find myself doing is, you'll be mining a tunnel under someone's building, and the stakeholder doesn't need to know all the funky, weird parameters and the complex engineering models. They don't need to know it. In fact, if you start talking to them about that, they'll just get confused and they'll feel more in the dark than not.
Mm-hmm.
Instead, if you just tell them the storyline, you explain the why, you use analogies, you use kind of tools to bring it to their level, then they can actually feel that you're bringing the conversation to them. And when they understand something, then you can actually find the middle ground and you can help them get across the line as well. And that's really been a big motivator for me, right? Making sure that when I'm explaining things to people, you kind of bring it down to their level, and you do it off a level of, like, showing you're working so that they can verify it. And that comes back to the trust level. It comes back to the honesty level. Clout's not what drives what I do. It's always been trying to find the engineering truth, and trying to be as objective as possible, right? So you can have an opinion that differs from somebody else's, but I'll defend it because I've got the proof of work behind it. And there's times when you're wrong, and you need to be willing to actually change your mind and change your view when better information comes to light. But if you've got that good grounding and you've done the background work, which a lot of people don't do, that's a big problem that we have. A lot of people don't want to do the work; they want the answer handed to them. And the reality is, particularly in markets, they're not an ATM. If you come into markets and think that you're going to be able to just game the system and pull money out like like an ATM, it's going to take you to task. And this is what happened with all these futures. People bet so much money because they follow a trader on Twitter and they see his chart and they go, "Oh, look, he's going long this thing." They go max long and they get blown up. Why? Because they didn't do the proof of work. They don't know why he opened that trade. They don't know how he's going to exit. And unfortunately, that is the state of the world. You have to do the work. And the way I see creating value for other people is if I do the work for them, to some extent, right? But then provide my opinion with the evidence behind it. That helps them get to that finish line of success sooner, right? And that's how I grew up, right? I follow people that provide value for me because they distill complex information in their expertise field. I can then absorb that across many facets, work it into my thesis, and it becomes a game of consistency. And we saw many influencers during this FTX thing who were essentially shilling things and didn't quite do the work that they probably should have. And it happens all the time. It's not just FTX. There's all sorts of other examples of this. People go down the path of least resistance, and it takes so long to build a good reputation and one major fuck up to blow it all up. And, in my view, I just don't particularly care about blowing it up. I'd rather people succeed over the long term. And it comes back to a very long term time horizon. And, reputations are built over many years. And I'd rather not blow that up.
Good for you. You mentioned Mallers before and the Lightning Network. I don't think I've ever come across, and I think I would put you on a par with Mallers in terms of your capacity to explain things clearly and simply, and in a language that everyday people can get. And you two are probably, in my mind, two of the greatest advocates for Bitcoin because you explain things so simply and in such plain English, and maybe because you're a similar generation, you can speak to younger people as well in a way that's meaningful. What's in your future? Tell me where you're going with all of this. I mean, we know where you are today. What are your kind of plans and dreams for yourself?
That's a good question. I mean, one of the great things about working at Glassnode is I can kind of work wherever, so it gives me a lot of opportunity to move around and kind of follow the trends and just explore things. Right, working while traveling is the best. I've mentioned to you before that spent 6 months just living in Mexico after as soon as the COVID doors opened up in Australia, within 2 weeks, me and my mate were out. And Mexico had the doors open, and you can't pay for that level of freedom. So to be honest, I don't really know. One thing I've been talking a lot with friends about recently is that right now is a very difficult time to plan. I'm normally pretty good with having a longer term plan. Right now is actually probably the first time in my life where I just don't really have a long term plan, and I'm kind of okay with the chaos in many senses. So to be honest, I don't really know, but it's, in terms of the work I'm doing at the moment, I think it opens up the opportunity for many more people. Seeing these classrooms in Vietnam is just, that's what it's all about for me. And I think that I think that Bitcoin is the best way. I have lots of conversation with my old man about this. He goes, if you want to change the world, go and fix something in politics. But you look at that, I'm never going to change anything in politics.
No.
You get bogged down in all the mess, you'll never solve anything. And it's in my opinion, there's a reason why our politicians are so poor form in terms of the quality of people, is because no one wants to get involved in that job. Anyone with half a brain doesn't want to get involved because they know they'll just get bogged down in mess. Now, helping the world push Bitcoin across the line, which I think is one of the best paths we have to true freedom, I think that is a well-deserved use of my time, right? That's where I can best allocate my time to build the future that I want to see. Basically, I see on-chain analysis as a way to understand it, a way to appreciate it, a way to hodl through it, right? Through the volatility, if you understand why people are more likely to just sit tight, it helps people survive what is a pretty chaotic early phase of this asset. So it gives people edge. It allows people to find a signal that they've never seen before. It allows them to hodl through it, and it creates opportunity for people to find work. And that, all of those things is my motivator. And if I can keep pushing that forward, that's a win for me.
Fantastic. Well, I see magnificent things in your future. If I look in my crystal ball, I do think you're on a path to changing the world. You already are changing the world. So thank you for everything you do in this space, and for Bitcoin, and for the Bitcoin community, and for what's going on in Vietnam and elsewhere. it's feeling like a nice positive place to potentially kind of wrap things up. Is there anything in particular at the moment? Are there any particular messages or final points or something we haven't touched on that you think you would like to throw into the ring?
No, I mean, I think it's look, it's one of those things where Bitcoin is it's a complex puzzle, and a lot of people, you know, there's kind of two buckets of people who disparage it. One are people who just simply don't want to do the work, and you know, there's only so many times you can kind of beat that thing around until, you know, eventually they just have to learn, right? They have to work it out themselves. There's other folks who think that Bitcoin is, you know, a boomer coin and it doesn't do anything, and it's just, you know, it's just boring and doesn't do anything else. But then you know, I spend a lot of time listening to Bitcoin podcasts and seeing what's going on in the industry. And I mean, where a lot of the crypto industry is creating Ponzi games and tokens and VC investments and, you know, financial primitives and stuff like that, which if you take a 10,000-foot view, it's fiat. They're rebuilding the fiat system. Sure, it may be more efficient, and that's fine. That's great. But it's kind of not really that great for the world. If you take a step back and look at what's going on with the Bitcoin space, you've got Jack Mallers and many others solving problems with payments, right? Remittances, helping human beings in the least fortunate parts of the world access money, dollar liquidity immediately with no fees, and removing the Western unions who've been preying on these people for decades. So that's immensely powerful for humanity. You see people who can flee with their net worth and cross borders and, you know, move from authoritarian regimes elsewhere, taking their net worth with them. Immensely powerful. You see it getting integrated on the proof of work mining side with monetizing wasted stranded energy. Current estimates that by the amount of wasted methane, this is methane coming off landfills and, you know, oil and gas stacks and things that, you know, that energy is just going into the atmosphere, doing absolutely nothing. The conversion of methane, which is 84 times worse than carbon dioxide, is a net negative, right, for carbon emissions. You're actually removing what would otherwise be greenhouse gas from the environment. Bitcoin's the only thing we've ever found that can do that. So it's going to help the environment on that front, which is, you know, going to break a lot of narratives. You're seeing it stabilize energy grids. You're seeing it once Bitcoin mining gets implemented in energy grids, it's actually going to lower the price of electricity, which is going to become an increasingly important thing over coming years, because as we all know, electricity prices are going up. So if Bitcoin can drive that down whilst also incentivizing the build out of new and greener technology, that's a narrative breaker. You kind of, and plus sound money and all the time preference things, you kind of look at all of this spread of things and you go, this is real. This is affecting the physical world. This is affecting the quality of life of human beings. This is affecting the quality of life of the 6 billion people that you don't see on the television, right? There's the 1 point whatever it is billion people in the West who have a great life, and, you know, sure, there's warts here and there, but for the most part, the other 6.5 billion would gladly take your seat any day. So Bitcoin is helping that sector of people immensely, right? And it's, you know, sure, there's stuff in the rest of the space it's going to help in financial systems, and that's great, but it's like a lot of it kind of looks like Wall Street, which it's interesting, but it's not exciting. Helping people on a huge scale with sound money and energy grids and, you know, things like that, that's exciting. That's world changing. So, you know, I think a lot of people who disparage Bitcoin don't understand, and that's fine because it's a complex beast. It is infinitely fascinating, right? I left engineering, designing, you know, kilometer deep mine shafts and tunnels underneath buildings and cities and, you know, 15, 20, 30 meter deep basements, all this kind of stuff. That's pretty exciting work. And this is orders of magnitude more engaging. So anyone who thinks that Bitcoin is boring is just wrong. And they just haven't done the proof of work. So, you know, that's kind of the final thing I'll say.
And a beautiful final thing to say. That's just fabulous. James, it's been an absolute pleasure. It's been a little while in coming. We've tried to connect a number of times. We finally got there. I can't thank you enough for your time. I really appreciate you joining me on this little podcast of ours, and I hope we get to cross paths again in the future. Thank you.
No, thanks a lot. It's been great to be here, and yeah, look forward to seeing where this podcast goes.
Awesome. All the best, James. Take care.
Thanks.
This episode of Bitcoin People brought to you by F2F Communications, helping you with your pitches, your presentations, your conferences, and your day in and day out business communications.